Is this a new bottom for the markets, or is this a new local top until the Fed gets its act together? Let's dig in, take a look, and see what is going on. The markets started up. Dow was up about 1% today. S&P, NASDAQ were all up quite a bit to open. They have sold off a little bit here going into the afternoon as I am recording this, 1 p.m. Eastern Standard Time. And as I always say, you want to watch for the momentum into the close. That will tell you investor sentiment, how they feel about what they're buying, where the markets are going, is to watch them, watch the momentum into the close for traditional markets. And also a lot of times for crypto market as well, right? You'll see a lot of pumps into the close for, Bitcoin and crypto markets. Sometimes you'll see dumps into the close. So that can kind of tell you a lot about what's going on, what the setup looks like for the next day. Big thing right now is the inflation print coming out on Friday. Investors' anticipation of the Fed's reaction to that. Bond prices rising is what's kind of pairing the markets off right now. 10-year is back over 3% again. Let's take a look at that right now. 10-year, about 3.032. So is the 20 and the 30-year. They're all over 3%. So that's taking a little steam out of the markets right now. Amazon had their stock split today, down a little bit after it opened. So we'll have to kind of see what's going on there. Apple announcing new iPhone, iPad software. So we'll see what's going on and what comes out of the Apple Developer Conference. Hopefully something good. And, Musk is continuing to play around with Twitter and decide what he's going to do there. A lot of speculation on this in terms of whether or not he could be forced to buy Twitter. But, if they made fraudulent and misleading representations about what was going on with users and things like that, and, fake accounts, and they did not disclose accurate information, well, he can walk away and Twitter can end up being liable. So it'll be interesting to see how this all shakes out, whether he's really serious or what's really going on there. Let's go ahead and jump in and take a look at the markets. And right now we will take a look as the Dow continues its work, working its way down into this bear market situation that it finds itself in, and the S&P, pretty much all of the price action looking the same. And of course, the last time the Fed tried QT was back in 2018, and we all saw the results of that. We've been looking at what the market structure looked like prior to 2018, kind of similar to what we're seeing now. But the big thing to kind of take into consideration here is that this is basically since 2009, this is a parabolic bull market that we've been in for all markets since 2009 with QE, zero interest rate. So all of this is what we are in the process of unwinding right now on the back of 40-year high inflation. We've never seen inflation at the levels we've seen. I know a lot of people are looking for, hoping for, calling for a Fed pivot, for the Fed to ease up, things like that. And the Fed cannot pivot. They cannot ease up because of where we're at with inflation. They have to fight inflation. Inflation will do more damage to the economy, to earnings, and in general to the markets than the Fed action will. And I think the markets are starting to realize that, especially if inflation comes out hot again, which I can't imagine. The talk, the narrative is from some investment analysts, some economists, is that inflation has peaked and is starting to ease a little bit. And we've been talking about this the last few videos. Everything I see is continuing to go up. I don't see any prices easing. Maybe used car prices are coming down a little bit. Maybe the housing market's correcting a little bit, but gas prices, food, shelter, clothing, pretty much everything else you need to stay alive is continuing to go up. Maybe clothing might be down a little bit because excess inventories and less people buying, so they're going to put sales on, things like that. But the real things that make a difference, healthcare, medicine, food, fuel, education, all of the things that matter, rent, housing costs, energy costs. When it comes to the fall and winter, we're going to really see huge impacts from the oil markets, fuel prices, when it comes to heating oil, things like that this fall and winter. Those are the things that continue to put a dent in the economy. But let's take a look at Bitcoin and the theory of, is this the top or is this a bottom? And let's take a look at a couple of things we haven't looked at in a while, one of which would be the logarithmic growth curve, the Bitcoin logarithmic growth curve. So let's put this on log scale here and take a look at what is going on. This is the Bitcoin log scale with the zones here and over the history of Bitcoin. Basically what this is, it takes an average of the price, historical average of the price, and kind of, logarithmically calculates out a growth curve based on historical price action. So it's really in and of itself not very useful. It can kind of give you, a range, but kind of like the stock to flow model. It's such a huge range that it's really not practically useful or applicable. And even to try to make any kind of long-term investment decisions based on a tool like this, it just really doesn't make any sense, because let's say this does end up being a top, and we'll talk about that theory in a minute, whether this is a local top for a while or if this is really a bottom and the market's going to move on again. The price action of Bitcoin affects the trajectory of the growth curve. And as you can see, it's starting to kind of flatten, over and lower its trajectory as it continues to move on. And as price, continues to drop or flatten or stay sideways, the growth curve is going to move with it. So it really doesn't really do a whole lot. Obviously Bitcoin started at 0. So it's been, going up since the beginning of time. It's an emerging technology. This basically charts the adoption growth phase of Bitcoin itself. So, but let's take a look at it, because back in the past, it would hit into these upper red zones and it would drop to the bottom of this green zone here and pretty much stay above that bottom line of the channel, popped up, wicked up just above the top of the red channel there, wicked below the bottom of the green here back in 2015, had the bear market consolidation for that 2017, 2018, where price barely wicked above the top and then stayed flat along the bottom of the growth curve, wicked down below in March of 2020. And then here is if you look at the Pi cycle top indicator and a lot of other market indicators that peg this as the market top for this cycle for Bitcoin, it didn't get anywhere near the red zone. So this was one thing that a lot of people were looking at, was the logarithmic growth curve. A lot of other, analysis, because there was no blow off top, all kinds of different things. Although this is a blow off top, it just kind of flattened out. I mean, this went parabolic right here, in this area here. So that was your blow off right there. And then price was manipulated for distribution along the way. And this was your irregular correction here. A lot of people are calling this a false top theory, in terms of this being a false top. Even though it was a higher high, it still looks like it's lower. And this is the all-time high here, obviously, which is still higher than right here. But then that didn't reach out of this midline zone here. And price has now, for the first time, broken and closed well below this bottom line of the logarithmic growth curve zone. So, Bitcoin is doing, other than, right here in March during the pandemic, obviously it closed down here and then immediately climbed back up. Right now it's closed down for several weeks below this midline, had a bear, had a nice green week, barely last week, and up, today, trying to rebound and climb its way back up. But, this is kind of a new situation here. This is definitely newer here, where price did not reach out to the red zone at all. So as price, stabilizes and continues to be less volatile, this growth curve is going to flatten out a little bit more. So a lot of people will look at something like this, or look at the stock to flow model and think that, hey, we're going to hit 180,000, we're going to hit 200,000 based on the growth curve. That's all based on what the average of the price action is. So again, not a super useful indicator in terms of, charting any kind of growth long term. Of course, we have the moving averages, same kind of thing. So these are all lagging. These are all averages, right? Averaging price. So the longer the price ticks sideways, the higher this 200-week moving average comes up. So price has always on Bitcoin touched ultimately that 200-week moving average in a bear market and broken below it. So the question is, where's that going to be? And the longer the price continues sideways, the more likely and higher this 200-week moving average becomes, where the whole theory of, is this the new bottom, or is this going to be a top if price ends up moving sideways along this area here, up and down, ultimately hitting it? And does it break below and find that as resistance and move its way down for further downside, or does it continue up from there and potentially kind of work its way back up into higher highs as we go along? So until we get there, we're just really not going to know. There's no way to know ultimately until you get to that point. So we'll just have to wait and see what happens. And again, what's going on here is we are in a different market cycle altogether. One other thing that we haven't checked in a while is the Gaussian channel. So let's take a look at that. Bitcoin Gaussian channel. I can't spell today. Let's see, Gaussian channel. Let's take a look at that and see what this looks like. We haven't checked out the Gaussian channel in a while, and here you go. So I've got this on the weekly. We're starting to get a red print on the Gaussian channel. That's what I've been waiting for to confirm. I know a lot of people have been looking at the 5-day Gaussian channel and it already printed red on the 5-day, but I like to look at the weekly because that's what really counts, right? That's what everybody's charting, weekly, monthly, all that kind of stuff. And this is just now turned red for the first time. So what happens in the past when we've seen the Gaussian channel turn red is that it generally stays red for, this is on the weekly, so 39 weeks, 273 days. And when that happens, price tends to break below the Gaussian channel by around 40%. Now, just because it happened before doesn't mean it's going to happen again, doesn't mean it has to happen again, but we'll look at a couple little indications in terms of what it's done historically. So where's 40%? That takes you down 40% from here, 20,000. There's been a lot of technical technical indicators that will show that price is going to hit 20,000, previous all-time high. Go down and test that, which would break below that 200-week moving average. If we bring that back again, take a look at the moving averages here. Right now it's around 22,000, but if price continues down, then the moving average, the weekly moving average, just like we said, would go up. If price continues down, the weekly moving average could potentially move down a little bit. So, it could get down to that 20,000. If price kind of continues to work its way down, this average will move away from it a little bit and it could get there. So the question is, will it do that? So let's take a look at the Gaussian channel in the past. So again, this area here, when it turned red in 2017, 2018. So let's go back to 2013, 2014, same thing. As soon as the Gaussian channel turned red, it was 58 weeks, 406 days. And again, price broke 52% wick low, 40% on a closing basis, 52% wick low from the point of the breakdown. So that's 40% again. So more confirmation there. And then again, here back in 2000, when was this? This is 2012. 133 days, 19 weeks. So really all we have is 2013, 2014, 2017, 2018. Both times Gaussian channel stayed for almost a year, basically in the red, and price broke down 40% from the bottom of the channel. Again, that's 406 days, 2013, 2014. This is 300 and how many days was that? Basically 38 weeks, 266 days right there. Thought it was a little more than that. Hang on. What was that right there? Yeah, 273 days right there. So let's just say maybe it goes 250 this time. If it says 250 days, what does that look like? Where does that put us? Another 250 days from here. Yeah, puts it into next year, January, February. So let's take a look at what that tells us back here from a time frame. So channel turned red in October, July. So yeah, different time frames altogether there, October through July, because this is just now turning red in July. So those don't really tell us anything. December. Yeah. So anyways, basically it's spending less time in the red zone when it happens. Of course, past performance is no guarantee of what the future is going to do, but that just is what it is. And this is the signal I've been waiting for. With this Gaussian channel turning red, generally price is going to stay down below there. It's gone down 40% from the bottom of the channel, which is about 34,000 when it turned red. That's where the price was. So again, if you take 40% from there, and let's just say, where is 30%? 30% down is 24,000. A lot of confluence there. That's your next level. We'll look at that in a minute. 40% is 20,000. So if we put this back on to the daily and take a look at where our confluence is for those lows, next stop 24,000, and then below that is your 20,000. So those are your next two lines of support for the price as it starts breaking down. The other thing to kind of look at here is really what's going on. I know this price action here lately gets everybody really bullish, thinking we're going to get a reversal when price pumps like this, and you get those liquidations and moves for distribution. Since price has been ranging, drops popped up, everybody thought this reversal was coming in, just like over here. Again, this is a different macroeconomic environment with the Fed doing what it's doing, zero, with the rates rising, QT starting. That changes things big time. So this is a whole different market here than what we had right here. Very different market environment. You really can't realistically or rationally expect a bull market continuation with the Fed doing what it's doing. It just isn't going to happen until the Fed pivots. The other thing to look at is minor capitulation. So we talked about that the other day. We haven't looked at this in a while. This is the Bitcoin hash ribbons indicator, where it gives you the buy signal and capitulation signal. This is the hash rate and moving average that this tracks. And whenever that hash rate crosses over the moving average, that shows that the miners are starting to sell. And then as it turns red, so this is something to watch here. This is on the daily time frame that I've got it on. You can put it over on the weekly as well, but the daily shows a better viewpoint. You get your buy signal. Generally, that represents a good time to buy. As hash rate continues to improve. But the reason the hash rate is rolling over and is down is because miners are shutting off rigs, because it's getting, with the price of Bitcoin, they're losing money now. They were at break even up in this area, but now down here in the 28, 29, 30,000 level, they're losing money. And a lot of this price manipulation that's going on are miners trying to keep the price propped up. And they can only do that so long, because if price really starts to crash, they're going to have to sell in order to maintain their operation, because the fees are down, usage is down, the cost is up, energy prices are through the roof. Their electricity is probably double or triple what it was costing them before. A lot of the miners have borrowed money to operate. They have to return that capital, as well as a return on the capital. So they have to return of capital, return on capital. And if they pledged their assets in order to borrow, so if they borrowed off of their Bitcoin to operate, and as the price goes down, then it becomes even more prohibitive in terms of paying it back, because they've got half of the value to pay back what they borrowed at twice the price, right? So if they pledge Bitcoin at 60, that's gone down, and then the value now has gone down to repay. So let's take like Michael Saylor, for instance. Their CFO came out and said, we would not be forced to sell. We would just pledge more Bitcoin to prop up collateral of our holdings. So they borrowed, $100 million, let's just say, or whatever it was, $500 million, $500 million they borrowed to buy Bitcoin. I think the last round they borrowed 60 or 100 million just based off their Bitcoin holdings alone. And the CFO said, we would just pledge more Bitcoin instead of, having to sell to cover that. Well, if the price of Bitcoin at the time, goes down, and now they're at a loss, their average has gone down. But if they pledged Bitcoin at 40,000, 45,000, like they were buying, that's where, their loan was. If the price drops, the value of the collateral has now dropped from 45,000 to 30. And if they say you need to cover that, but the value now is at 30, that means they're only going to value the coverage at 15,000. They're going to drop that, because they're not going to give you full face value to Bitcoin. They're going to say you need to bring twice as much Bitcoin to cover this amount. So if you owe $100 million, they're going to want you to pledge $200 million worth of Bitcoin to cover that, because Bitcoin can go down that much. And that's the problem with bank reserve, bank holding Bitcoin on reserves, is their reserve requirements. They have to hold twice as much of risk assets, or 3 times as much, in some cases 4 times as much as the face value of the risk asset, to cover and hedge against any downside. So anyways, this is something to watch for here. This is why miners would be selling. Their costs to do business have gone up. They've shut down operation because it's not profitable. So the hash rate goes down. They have to sell to cover operational expenses. The lower the price goes, the more this will accelerate. Then you start to get this capitulation signal, which is good, because this tells you when to buy and sell. So if this capitulation signal starts to come in, you can see where it changes color, gets closer and nails that bottom. When this starts to move up, the hash rate starts to move back up again. The average starts to move back up, and this starts to get a little darker. You can get that buy signal, but you have to be careful, because sometimes it'll print, false signals, right? So this was a good buy signal right here. This was a good buy signal right here, but this was a little late in this area. So you got to kind of watch it, watch the price action, watch the signal, and kind of see where it's at. So the hash rate signal indicator can be a really good one to watch. So let's take a look at something else just to kind of bring this in perspective. This is obviously liquidations and price manipulation to get up here to distribute. You can buy down here, pump the price, distribute up here. The whales, miners, they hold a lot of Bitcoin. They can manipulate price that way to maximize the profits. But at the end of the day, what a lot of people don't think about is with these pumps, you're still putting in lower highs each time on these pumps. Sure, it pumped up here, but now this is a lower hourly high than here, which is lower than here. So that's what you got to kind of keep an eye on this price action. Even with these pumps, it's still trending down. You have your high. This is 4 hour, lower high, lower high, lower high region, lower highs all through here. You get your bounce. That bounce is still a lower high. You got a bounce. It's still lower than this high. Popped up here, but still lower than this high. And then this whole run right here, it's just been lower highs and lower lows all the way through. So nice bounce here, but it didn't take out any of these. Nice bounce here, but it didn't take out this. So this trajectory is still mega down. And that's where these trend lines kind of come in handy, is they kind of help you spot the trends, right? Because it's all about cycles, ranges, and trends and price action. So you want to kind of keep an eye on what is price really doing as it's trending around. And again, with what the Fed is doing right now, it's a tricky time. And the altcoins are kind of following along, right? Bitcoin dominance is up, obviously, because all of the liquidity is draining into Bitcoin. Altcoins are taking a hit twice as much as Bitcoin. Bitcoin dominance is continuing to rise. The higher this goes, the more altcoins are going to bleed against Bitcoin. People used to trade, altcoins in and out of Bitcoin, and the whole goal was to make more Bitcoin. So some people still do that, but a lot of people are trading for dollars right now. So with QT, with the Fed doing what they're doing, with interest rate policy going where it's going, very different time in the market. So again, very difficult to expect realistically any kind of a reversal. Sure, bear market rallies, big bounces. We've seen those in the past in traditional markets as well as crypto. But these are some of the things that I'm looking at. The Gaussian channel is interesting. I hadn't looked at it today. So that red, I haven't looked at it in a week. So that red changing to red is interesting, something to keep an eye on to see if that continues and how long. The Bitcoin hash ribbon indicator, that's another one to keep an eye on for capitulation signal. And then, if we're down into that lower level capitulations, whether or not that actually turns into a bear market. And when ultimately the buy signal comes back in, then of course the moving averages, where that 200 weeks going to come in. And then that will, kind of the whole thought thesis on, is this a top or is this a bottom? Last year price did not break below 29,000 before it reversed. So that kind of put in a floor where there was a lot of buying activity, a lot of support. So we're trying to see this time, is that going to be support, and is price going to hold here until the Fed changes, the economic conditions change, and price can react and move forward? And is that going to be our new macro bottom, or will price break down? And with the Fed not being able to pivot, not being able to support, assets like they did before, will 30,000 ultimately flip into resistance, where price might bounce down into those 10, 20,000 range, pop up to 30, down to 10, 20, pop up to 30, and kind of maybe 30 becomes a ceiling for a while. So that's kind of where we're at. And those are the things that I'm watching and exploring. And I will see you on the next video, and we will update the thesis.